It looks like if you follow the trend and all of these exponential assets do the same thing, they get overbought, top of the trend. My guess is this goes from 2 trillion to 8 to 10 trillion at the end of this cycle, and then we correct.
Bitcoin crossing over $60,000 last week. That was for the first time since April, but now have the first Bitcoin futures ETF.
So it would obviously be bullish. So what you would have in the futures product is a natural bid for the front month contract that would create arbitrage. People would buy the spot market.
December, at some point, there's going to be quite a big sell-off as everybody rebalances. I think it's different, and I've spent a lot of time thinking about this. I think it's going to extend further because we've got new players into the market and they operate differently. And the amount of staking that's going on and what that does, that's going to probably lead to a buy the rumor, sell the fact. And I think it's going to be very powerful because, you know, if you have the ETF and this ridiculous shortage of ETH that's going on, you've got something pretty powerful. But the big factor that people need to think about is how institutions asset allocate. It's quarterly and it's annual. So we will see this bull run. Everybody who hasn't yet invested or wants to increase their weightings, that will come in Jan. And generally, everyone with new shiny P&L, the hedge funds too, allocate. So I think that gives Jan, Feb and March much more potential. And it could go in as far as June before, you know, there'll be excess speculation and the usual thing. It will kind of collapse under its own weight for a while, and regulation may be the thing that gets the market scared. But I think it extends further in price and time than people expect. That's a function of adoption. So the more participants in the market, the broader and longer this plays out. So it's kind of a function of network adoption and the kind of Metcalfe's law idea. So it makes total sense that the price is less spiky, but the trends are longer. I mean, I've been talking about this for most of the year. We kind of knew it was going to happen now. So like, this is not unexpected news. It was coming. We are in the teeth of the best part of the entire cycle. The price is going to go up regardless. We threw all the FUD at it over the summer. That was the corrected 50% correction. Basically, the market's been trading sideways in a volatile range since March for Bitcoin and May for the rest of the market, Ethereum. And this is the point. I mean, if you look at all of the post-halving cycles, this quarter is where all the gains are made. I mean, I cannot stress that enough, that this is the time. It's the, you know, I keep adding to my risk. I mean, every penny that I get in just goes into this. I'm buying call options now, which I haven't done before, because before we didn't have, you know, to get options right, you need to understand time horizon. But when you're in this kind of 3 to 6 month phase, you kind of can nail the time horizon. So options become really good ways of getting leverage without much risk. It looks like if you follow the trend and all of these exponential assets do the same thing, they get overbought, top of the trend. My guess is this goes from 2 trillion to 8 to 10 trillion at the end of this cycle, and then we correct. My view is that if you look at all the size of all the other major asset classes, equities, bonds, real estate, they're all between 150 trillion and 300 trillion. Global derivative market's 1 quadrillion. So the total market cap is 2 trillion. This is a full asset. It's the fastest adoption of any technology in all recorded history. I think it goes to 200 trillion over 10 years. That's 100x for an entire asset class. I've explained that just using the network adoption, looking at the other assets, this is 100x for an asset class.
Yeah,
right?
Exactly.
Just to be clear, we have never in human history been given an entire asset class, not one thing, an entire class that goes up 100x. So it's hard to say that would not be your overweight. Now, Yoni's right. You know, there's going to be points where you actually want to own equities. And like Mark, I'm a big believer in this exponential age technology investing. And I think that is a nice portfolio. But then if you're going to take that much risk, because that's a lot of risk in all of that stuff, it's why. How do you do that? Is you need to have an income.
Yeah.
You need to be pretty secure in your house. You know, if you paid off a significant part of your mortgage, you know, if you made some crypto profits, get rid of your debts. Then you can be as much of a degen as you want. Take a long-term view.
What are your numbers? 10-year, you can't touch the split. You can only touch the asset.
100x and I can afford to take the risk because I've got an income and I've got
Yes.
assets, I'm 100%. But it won't be that, because the reality is I will try and allocate. I'm a 30-year hedge fund guy. I can't help but try and do a bit of allocation occasionally.
What percentage of your portfolio right now is in alts?
Well, I've got 3% Bitcoin, if that helps.
3% Bitcoin.
So that's 97% everything else. I'm 25% alts then.
So 25% alts. So that means that 72% of your portfolio is in Ethereum right now.
Correct. I've got a bunch of this middle tier stuff split by DeFi, layer ones, just kind of, so I've got a broad range of the stuff, and I haven't really kind of tried to pick any winners in that bunch. And I just look at the basket and I see some of them are up 300% and some of them are pretty much flat from where I bought it. And I'm just learning about what that is. And some of them become more meaningful as they grow. If I'm taking a bet, like Mark's thinking about, okay, what are the themes I really want to invest in? What I'm really interested in is metaverse and social tokens. That's my focus. So, I've talked about Rally before. There's Luxo that's coming out that's interesting. What Dapper is doing with Flow is interesting on that, but that's really early, and that's not going to be for this cycle really. But I want to be involved heavily. And then metaverse, I own Sandbox and I own Decentraland and I own a bunch of this stuff because I know this is all going there. This talk about price and this. I've been using this for over a year, and it's been pure magic. This is Bitcoin versus the 2012-2013 cycle. And it gives us, a pretty clear target, and it's been magic. I mean, it gave me the strength through the bear market to keep adding, thinking we know how this plays out. And I'm going to also show you the Ethereum version of this. And so here's Ethereum versus Bitcoin in 2017. It's been pretty damn good. In fact, I've got this as a real-time chart on my Bloomberg, and it almost works to the day right now. It's so close, and that gives us upside to about 20,000. I also use log channels and stuff to give us other stuff. But what's really interesting is stuff like getting into the alt stuff is Solana is exactly following Ethereum 2017. Going to be something interesting as well, because institutions, again, the market's not used to this. They rebalance their portfolios. Now, if we're all right and we have this big final quarter run, December, at some point, there's going to be quite a big sell-off as everybody rebalances. And December is going to be a period where you're not going to know. And there's going to be a bunch of people freak out and say this is the end of the cycle. They might be right. Or what I think was happen is then Jan, Feb, it just explodes higher again as all this new capital comes in. So it's going to be a really tricky period psychologically to deal with, because people are sitting on gains and people want to, buy some real life stuff.